Hey everybody, this is James with wstrades.com. Want to give you an update here on Clover Health, or CLOV. Found an article here on investorplace.com, and it says, despite the Wall Street-Main Street battle, Clover Health remains a great buy. It says shares of Clover Health have been extremely volatile despite operating in the relatively boring insurance industry. CLOV stock has become a battleground of influence between Wall Street and Main Street. Readers of my last article on CLOV would have done extremely well, though. The price had tripled at one point to an all-time high of $28. The stock has since fallen back down to earth and is now trading once again close to the April price. Yet the adage, buy low and sell high, still rings true, and I believe it's once again time to take a closer look at CLOV stock. It says the street is overly bearish on CLOV stock. The fact that Wall Street analysts remain incredibly bearish on CLOV stock is a good thing. This is because the bearish sentiment that is weighing on the stock will fuel the next move up. Think of it as acting like a weight that is being put upon a string. In the last few months, several prominent Wall Street firms have downgraded CLOV stock. JP Morgan trimmed the price target to $9 from $15 a share. Bank of America analysts downgraded CLOV stock to underperform from neutral, but maintained a price target of $10. Analyst Kevin Fishbeck stated that the current growth trajectory does not support the valuation. Investment bank Cohen had the most damning analysis of all. The firm has a Wall Street low price target of $7 for CLOV stock. The firm's analyst argues that the company is risking it all on Clover Assistant. This is rather a silly argument against Clover Health, as the firm is a technology company, so of course it is dependent upon its technology. Looking at tip ranks, CLOV stock scores a moderate sell rating and an overall underperform score. The average price target among all Wall Street firms is $9, implying not much upside from the current price levels. Directing contracting is massive success. So it says, despite Wall Street's sour mood, Clover Health's most recent financials show a company that is on the upswing. Revenue for the second quarter was $412 million, which is a 140% increase compared to the same period last year. The revenue increase for the quarter was primarily due to the launch of the company's direct contracting program, Clover Home Care. The breakdown of the company revenue is as follows. Medicare Advantage premiums consisted of $195.4 million, while direct contracting revenue was $216.4 million. These results highlight what a game changer direct contracting could be for the Clover Health business. Remember, direct contracting allows Clover Health to access a much larger Medicare market. It does so by offering solutions in order to bring down medical expenses and improve health outcomes. Clover Home Care has been shown to reduce hospitalizations by 17% and expenses by $325 per month. According to Clover CFO Joe Wagner, the company is on a $1.6 billion annual revenue run based on the second quarter results. Management's guided 2021 revenues to be in the range of $1.4 to $1.5 billion. This is nearly double Wall Street consensus estimates of $811.5 million. I believe that the success of the direct contracting business has not yet been reflected in the stock price. So let's take a look here at some price action on Clover. Definitely in the short term, it's not looking too great. They did have a big run up here. I think this was like a 20% gain at one point, and then it's been nothing but selling since. You can see on the TTM squeeze histogram here on the daily chart that the price is dipping back below, or about to go below, the zero line on the TTM squeeze, and the RSI is riding pretty flat, a little below the midline here at 45.74. So after this run here, it looks like a little bit of profit taking and a little bit of selling as this thing dips back down below here. You can see this long-term support line that I have drawn out here. In mid to late August here, it did dip below that a little bit, but then it rallied right off of that. Zooming out here on the daily, you can see that support line goes back pretty far. That's a July spot there. And then at one point, all the way back to June 1st is when it was like more of a resistance line that it was trading under, and then it broke above. So if CLOV continues to sell towards this line here, I would expect this to be a very important support line to look at. It looks like the selling is already slowing down, though, around $8.27 here. I mean, today's candle is pretty indecisive. So I'll continue to keep you guys updated on Clover Health. Please like this video. Please also subscribe to the channel. If you're not subscribed, hit that notification bell. Appreciate you guys for taking the time to watch this. Talk to you soon.